Welcome to the Allan Small Financial Show. Thank you, as always, for taking the time out of your busy day to share it with us. We have an amazing show coming to you today. We have a great guest talking a bit about the future, the metaverse. What is the metaverse, and how can you benefit from the metaverse or invest in the metaverse? So we'll have an expert on the show, Lorne Sugarman. He'll be with us shortly to discuss the metaverse. But overall, we bring this show to all of you every other week so that we can answer the financial questions that you all may have regarding your portfolio, the markets. Perhaps it's something you saw on social media, on the news. This is what we try to do. We create a show to help you, the investor, manage through all the chaos that is out there in the world today and profit from it as we go forward. So some of the topics we have on the show today are understanding the metaverse. As I said, we have a Lorne Sugarman coming up shortly. He'll talk to us about the metaverse. Our This Week segment, again, it's about what I believe is important for individual investors to consider before you make your investment decisions over the next few weeks. Analysts skeptical of markets moving forward. We've spoken about how individual investors have been quite negative to start the year. Analysts are actually negative as well. We'll speak about why that is. Investment ideas for a slower economy. What ideas or what investments can you add to your portfolio that would make sense even in a slowing economy? We'll talk a bit about Canadian inflation. We're seeing Canadian inflation coming down really right across the board. I have some interesting stats to share with all of you. And inflation right now in Canada, somewhere around 4.3%, getting closer and closer to that 2 to 3% range that the Bank of Canada would love to see. Investing internationally. A lot of you watching the show today, you make a lot of your investments here in Canada, but investing internationally is very, very important. We'll speak a bit about that. And lastly, the Canadian dollar. What's going on with our dollar? Why has it weakened and now gained a little bit of strength versus the US dollar? And then we're going to take your questions. What are you asking? If any of you have a question today, please put it in the chat area, YouTube, Facebook, whatever you're using to join us this afternoon. Please put your questions there. I would love to be able to answer them during the show. If I don't get to it during the show, then I hope to answer it during the next few weeks before the next show or on the next show. So without further ado, let's get on with the show. So as I mentioned already, we have a great guest today. I'd like to welcome Lorne Sugarman, CEO and Director of the Metaverse Group. He has extensive operating, investment banking, and principal investing experience. Prior to the Metaverse Group, Lorne was the CEO of WellPoint Health Services. He also spent 20 plus years in advisory services with GMP Securities, KES7 Capital Inc., Deloitte Consulting, Deloitte & Touche. And wow, extensive resume there, Lorne. I'd like to welcome you to the show today and thank you for coming on.
Thank you so much, Allan, and thank you to your listeners and viewers. Really appreciate the opportunity to chat with everyone today about all things metaverse.
Excellent, excellent. So I thought we would have sort of an informal chat. You're the expert on the metaverse. And so I guess to start with, I guess the first question I would obviously ask is, what is the metaverse? And being CEO of the Metaverse Group, can you tell us what your company does? What's an average day look like at the Metaverse Group?
Sure. So that's great and appreciate that. The metaverse gets so many different connotations and definitions. And the way I define it very simply is it's any 3D experience that one has. And so we go back to Second Life, Sims. Some of you may be familiar with that. It really began that far back, but bringing it into today's context. It goes from Decentraland and Sandbox, which again, some of you may be familiar with, are decentralized virtual worlds, to things that some others might be much more familiar with, Roblox that our kids play, Minecraft, Fortnite, etc. And while those are walled gardens, they're still metaverses. And the reason they're still metaverses in our view is they're really cool 3D experiences where they're interactive and you are engaged and deep into an experience. You don't need glasses, wonderful virtual reality glasses, or anything to have what we view as a metaverse experience. And so what Metaverse Group really does is we're all about creating those experiences. Again, we do those 3D experiences. We just did the Metaverse Fashion Week that was held last week. Lost track of my dates. We had companies like DKNY as our clients, Lancia, which is a car company, Miami Fashion Week, Dolce Gabbana, and many, many others, and had amazing experiences and fun with them, and everything, from interactive experiences with DJs to, digital wearables and proof of attendance events and all those types of great stuff, and had over 25,000 people attend, 10,000 specifically the DKNY experience, and even amazing dwell time, over 18 plus minutes spent at our DKNY events.
Wow. So you're able to attend these fashion shows, I guess, right in the own comfort of your home, I guess is what you're saying.
100%. So there's two ways that make it really simple for you in your own home. There are some where you just do it browser based. So, I'm sitting on my desktop today as an example. I can just go to decentraland.org and enter the experience. I can click on as a guest, and it's really simple for me to enter. Otherwise, there are like Roblox and others that are, downloads. Again, pretty simple downloads. And what's even more exciting about this, which going back to my days as an investment banker, is when the mobile world came on board, we brought billions of users on board, and companies like Spatial, which is another virtual world, allows you to do it on a mobile basis. So does Roblox. Really simple.
Really simple. So I guess there's more than one metaverse, right? It sounds like you can enter into many types of metaverse. I don't know if that's the right terminology. So how many are there? Like, is it indefinite or?
So, it's hard for me to keep track. I used to keep track of all of them. So what I call them is virtual worlds. And just like we have one internet today, I believe we have one metaverse. Doesn't quite work yet because these different virtual worlds aren't all interoperable. They don't allow us, like we can get on one regular internet and jump from site to site by, typing in www. something. But there are, at least in our latest tracking, over 300 different virtual worlds that are being created out there today. Obviously, with the backdrop of the tech markets and the funding environment and the crypto winter, as I'll put it, I'm sure some of those will disappear and are disappearing at this point in time. But there are multiples of them that provide different experiences, no different than social media today, where there's Instagram and Twitter and Twitch and TikTok, etc. And we'll choose what is best for our experiences. And frankly, our customers, the corporations, the brands, etc., will work with them to decide, hey, this platform makes the best sense or that platform makes the best sense.
So obviously we're a financial show. And so kind of tying it back to finance here, how can someone invest in the metaverse? Obviously, you can invest in companies that, such as Meta itself, formerly Facebook, and buy the stock there. But you could also invest, as I'm being told, in, for example, property, real estate in the metaverse. How does that work? And obviously, when we buy property here in actual land in our world here, obviously land is a very a commodity that is not everywhere. Obviously, most of the land here has been built on. But in the metaverse, I would think there's lots of places you could buy real estate. And I've heard outrageous amounts of money being spent on land or real estate in the metaverse. How does that work?
Yeah, so that's a great question, and you're right. There's public equities that one can be part of. Like I said, Roblox. You said Meta, but there's also, as you pointed out, virtual land or virtual real estate, as we refer to it. So today we own over 500 NFTs in places like Decentraland, Sandbox, Orbit, Superworld, etc., that are these digital real estate pieces. And our thesis is quite simple, is that just like traditional real estate, we're there to create a yield. And so we charge people rent to use our land, and we'll create experiences for them. Or, like it's an example of DKNY, we built out their virtual store. We did this with KB Home as another example. And we created an experience, and they pay us rent to use that store or to use that piece of of real estate, and it creates value for it, because I believe, just like, physical real estate in downtown Toronto as an example, if it's creating yield and you have tenants, there's value there. And so we've looked at it from that perspective. We believe that location is extremely important. So again, just like physical real estate, you want to be close to roads, you want to be close to key locations. So the center of a specific geographic area, i.e. the downtown as an example. And so we think about all those metrics when determining which locations we want to locate ourselves in. It doesn't apply to every virtual world, and not every virtual world has a land model, but it does apply in certain virtual worlds that do have these land models and do have the ability for you to transport yourself from one location to the next.
But I guess, like owning land in Toronto, there's only so much land, but in these virtual worlds, it's probably unlimited, right? You could have many different companies, I guess, having space in the virtual world, can't you?
So that, again, it varies from virtual world to virtual world. I'll pick on Decentraland today. They have 90,000 parcels of land that exist in all of Decentraland. 45,000 are in the community. The rest are used for, green space or other items that Decentraland community centers for Decentraland. And those 45,000, it would require all the landholders as well as the token holders to agree to distribute more land. And that obviously would be a deflationary act. There might be reasons to have deflationary acts, but I would expect that no one really wants to see the value of their land going down. So there is a capped amount of land in that particular virtual world. And other virtual worlds, like Other Side, have committed to caps on the amount of land. And so there are caps in specific worlds. Again, not every virtual world will do this, and not every virtual world has land to sell, but there are caps that make you feel like downtown Toronto.
So I'm going to ask you kind of a question that popped into my head. So when these people go on to these virtual worlds and you go, I guess you could go shopping or you could go looking for items. How is that different than going online and shopping through Amazon or shopping through, some website like that, equivalent of, like that? Is it much different? Is it similar?
So my view is it is much different, and the reason it is much different is you now have, instead of a traditional static 2D website like Amazon, where you're scrolling through lists and lists of items, you actually get a 3D image of that particular good. You can touch on that good. You can ultimately, we'll get to a point where your avatars can actually try on that good. And when we really get there good with the technology, you yourself would be able to try on that good and see how it looks on yourself. I'm sure we've seen some of this before with like Ray-Ban sunglasses or other things like that, where there's technologies out there that allow you to do this. So it's a much more immersive, deep experience. I pick on my daughter. She's 15, and I know that she loves to shop online. It would be much more a fun experience if she could do it with her friends, with avatars, try it on, see how it looks, just like you were going to a regular mall. Instead, you're doing it in the comfort of your home.
Wow, that's amazing. I guess my last question would be about the future of the metaverse. Obviously, there was a lot of hype surrounding metaverse maybe a year or two ago. It seems to have died down a little bit. Obviously, I guess the hype is now more and more on AI, right? Chat GPT and all that. And we seem to be moving away from the metaverse. I know Mark Zuckerberg has talked about recently how they're still continuing to spend money on the metaverse and building that out. So hasn't gone away, maybe just on the back burner. But what do you think the future holds for the metaverse and the Metaverse Group, I guess?
Yeah, so I'm still obviously a big believer in the metaverse, or I wouldn't be sitting here today still. But we believe that, just like any other technology, going back to the mid-90s when I started as a banker in technology, is there's troughs and peaks and valleys and all that wonderful stuff. And now is the time, and Metaverse Group is doing this, is to put our head down and build out quality products that have product market fit. I believe that ultimately everyone is going to have a 3D immersive experience as part of their website or a social media experience in the future. And so we're not seeing anything. AI is fantastic, and AI is part of our business model in the sense that we're using AI to build out our experiences, and everyone should. It's additive to everyone's business. It's a tool that should be used and help with efficiency and help you drive the value of your business. And we're just going to continue to use that as a tool, and it will just be part of the Metaverse Group.
Sounds great. Lorne Sugarman, CEO of the Metaverse Group, thank you so much for being with us today. answering my questions regarding the metaverse. Hopefully, we taught our viewers a little bit more about the metaverse if they didn't. And I'm sure if they have more questions, they could always send them in to me, and maybe I'll send them off to you. Maybe you can help me answer some questions that we get later on. So thank you again for being with us and taking the time out of your busy day.
My pleasure. Thank you for having me on the show, and always happy to answer any questions. Nice seeing you.
All right, take care. Now's a part of the show where we discuss, or I discuss, what I believe is important for individual investors to consider before you make your investment decisions over the next few weeks. We have 3 topics that I always like to touch on. This week, or for this show, our topics are quarterly earnings. We're just entering into the quarterly earnings season. The US big banks and smaller regional banks kick off the earnings season, so we'll touch a bit on that. Overweighting a position or area of the market, something for individual investors to consider. We always speak about a balanced portfolio, but is there ever a time where you should overweight something? And lastly, and what topic I seem to always have on this list, Fed speak or Fed actions. Seems like Federal Reserve governors always seem to come out and have comments after their meeting, before their next meeting, talking about either maybe we should slow down the rate increases or increase the rate increase, or just continue on a path of higher rates. So Fed speak tends to be something we should consider or factor in before we make our investment decision. So let's touch on the first one, starting with quarterly earnings. And interesting enough, we've, I guess, come to the point in time, this show is actually a perfect spot to talk about quarterly earnings. We've just received some of the large banks in the United States, actually all the big money center banks, speak about their earnings. And this was under a pretty big spotlight or magnifying glass. With the banking crisis that the United States went through in the first quarter, we all wanted to know, what is the state of the banking system in the US? And were the problems in some of the smaller banks, did they spill over into some of the larger banks? And we received quarterly earnings from JP Morgan, Citigroup, Wells Fargo, Bank of America, Morgan Stanley most recently today, and Goldman Sachs just the other day. We have a chart, I believe, of Citigroup, and Citigroup just had fantastic earnings. You can see that the stock has gone from the low 40s up to about $50, a nice run recently, and their earnings justified the run. They gave no indication that they were under duress or any stress with respect to deposits leaving the bank. We also saw earnings from other banks, such as Wells Fargo, same thing. Wells Fargo had great earnings as well. They spoke about, again, how the bank is thriving. And what many people have been saying is these large banks were definitely the benefactors of some of the smaller regional banks losing business. When anybody has a fear that these smaller banks aren't going to be around to maintain or guarantee their deposits, what do? They take their deposits and they move from a smaller bank to a larger bank. And same thing happens here, or what happened here in Canada. The main difference is in Canada, our 5 largest banks or 6 largest banks pretty much dominate the banking sector, whereas in the United States, there are much more or many more small regional or community banks. Lastly, I think we have a chart here of Goldman Sachs. Now, Goldman Sachs came out with quarterly earnings and they stumbled a little bit. And as you can see here, this chart was from the other day, down over 1%. And Goldman Sachs basically had a write-off of a few $100 million write-down. Some of their bonds, again, ground zero for what the banking crisis was all about in March. So Goldman Sachs had some issues with some of their bonds. They had to write off some of their bonds at low pricing, and that ate into some of their profitability. So overall, corporate earnings season is something individual investors need to be mindful of. So far, we've heard from the large banks. This week, we started hearing from some of the regional banks, smaller banks. The biggest regional bank, PNC Financial, a name that I've purchased for some of my investors that can handle the risk of owning PNC. I think it's a great bank, the largest regional, a name that was sold off heavily, not because of their business, but just in sympathy with other regional banks. And now we're starting to see PNC move higher based on the fact that their banking model and their business is very good. So keep an eye on quarterly earnings. There's PNC. Keep an eye on quarterly earnings. I think it's very important as we move into technology and other areas of the economy. Netflix last night reported some disappointing earnings. Netflix is down today, as an example. So keep an eye on quarterly earnings. The second idea to consider before you make your investment decisions over the next few weeks is this idea of overweighting a position in an area of the market or an actual investment itself. And when should you do that? Well, in my opinion, I think you can overweight a position if you feel very strongly of a position, if you do your homework, if you figure out that a name like this or an area of the market like tech or banking or oil makes a lot of sense based on the macro, what's going on from 30,000 feet in the sky and looking down, and from the micro, from the bottom up, what's going on the ground. And so as an investment advisor, I think it's our job to figure out when to overweight certain positions and at what times to do that. So I have here a couple of ideas that I think may make sense today. First one, Bank of America. Bank of America, second largest bank in the United States. At the high point, it was around $50 a share. So you're looking at about a 40% decline from the highs. You look at all the way to the left of the chart, you'll see when it started to get around $40 about a year and a half ago. And you can see the fall off in March of this year when we had the banking crisis. But again, Bank of America just reported earnings. They were solid. They didn't lose any deposits, or if they lost deposits, it was more for seasonal reasons, nothing to do with any nervousness about the bank not being here next week or next year. Bank of America, one of the largest institutions in the United States and a great bank to own. Another name in a different space, or actually in the same space, is PNC Financial. And we saw a chart of that just a minute or two ago. PNC, largest regional bank, as I said, fantastic bank. If you went back about a year and a half ago, the stock was actually well over 200. And you look at where the stock was prior to the recent fall, you're looking at about a $160 to $170 share value. Today it's 124. And as the CEO said in an interview this morning that I caught a glimpse of, they don't even consider themselves a regional bank. They consider themselves a main or a big money center player in the United States. Moving to a different name that I think some investors can consider putting more emphasis on or overweight position on is Amazon. Amazon's a name, as we all know, we're all very comfortable with. This is a name that has fallen by almost half when it was down to about $90 a share. It's basically moved higher, above $100 a share again. And I believe as they cut costs and as they move forward with their cost-cutting structure, I think their top-line growth is still there. If they can reduce costs and reduce expenses, I think their bottom line will follow. And this is a name, again, if you can handle the risk involved and the volatility, this is a name that I think many people may consider overweighting in their portfolio. The third topic that I mentioned is Federal Reserve action, or Fed speak. And, Fed speak is something that we really can't anticipate. The other day, for example, Governor Bullard came out, the St. Louis Fed, and said, we need to see rates even higher in the US, that inflation is still not where we want it to be. And the market actually dropped on his words. And that's something that's very difficult to manage. And I totally disagree with what that governor said. But we've heard Loretta Mester, we've heard a number of Fed governors speak about raising interest rates further. No one really talking about lowering rates. Austin Goolsbee, Chicago Fed, he was one that actually talked about being more responsible and letting the data speak, and the fact that this credit crunch or credit crisis that we're seeing right now could do a lot of the Fed's work. So they may not need to continue to raise rates as aggressively. We have a few charts on this as well. U.S. Consumer Price Index, or U.S. inflation, down to 5%. Core inflation, 5.6. Again, this is down from a high of over 9%. So inflation continues to fall. It's just a matter of how fast. And it seems like for the Fed, it just can't be fast enough. For all of us, we're saying, no, it's going in the right direction. You just got to be patient. Second chart that we have here is the Fed funds target rate. And you can see the spike up. We've had this chart on the show before. And now here we are in the 4.75% to 5% range. They always give a range, the US. not so much a specific number, but a range. So if the Fed continues to take on this hawkish tone, this aggressive tone to raise rates, the market's going to struggle. Whenever the Fed seems to talk about or give an idea that they may be pausing, the market's going to rally. And this is the push and pull that we have to go through. But again, understanding what the Fed is doing, understanding what the Fed is saying, I think is very important before you make your investment decisions going forward. On our last show, we spoke about how individual investors seem to be a lot more negative these days as compared to really any other time that I've been in business. And I've been in business through many downturns in the market, COVID or financial crisis, tech bubbles bursting, etc. But I seem to get a lot of negativity from investors lately on many things. And that negativity maybe is also coming from analysts. We've heard a lot of analysts recently talking skeptically, it's hard to say that word, skeptically about the markets. And the reason for that is whenever an analyst looks at the overall market, let's take the S&P 500, they look at what the earnings per share of the companies trading on the S&P 500 will be for the coming year, $220, $200, etc. And then they like to slap a multiple on that, a premium, if you will, 18 times, 19 times, 18 times, 17, 18 times is usually the average. And so what you find is when you do that calculation, you usually get an S&P or you get an S&P number somewhere around 4,000. Well, today, the S&P is trading above 4,100. So a lot of analysts, investors that do this type of calculation are saying, we think the market is at best fully valued and maybe even overvalued. And therefore, maybe we don't see how much more the S&P 500 can go higher. And you could see how well the S&P has done over the first 3-4 months of this year. And the TSX has been no different. So analysts continue to be skeptical, more so based on a numbers basis versus anything else. But as we know, the stock market, or the S&P 500, say the stock market, is a market of stocks. So even though the market in general may be fairly valued or perhaps overvalued, the stocks within the market may not be. There will be pockets of strength within the index, within the stock market, that can still move higher. And this is what analysts seem to forget when they go on TV or they go online and they tell you not to be a buyer, they tell you to be a seller, to go to cash or whatever they're saying. They forget that you could still make money even in a sideways market. The Dow Jones between 2000 and 2009 crossed the 10,000 point mark 6 times, to the up, to the down, to the up, to the down. So if you own the index, yeah, you didn't make much money. But if you own stocks within the index, you actually did very well. So again, it's about picking the right stocks and understanding the investments themselves, what is good quality, what is trading cheaply, because even if the economy is slowing, you could still make money today. So here we are, some ideas for a slowing economy. Well, we've spoken on our last show, when the market is trading sideways or slowing down, how can you make money? Well, you buy dividend payers, right? Stocks or investments in general that pay you something while you wait for the growth. You could also look to some of the interesting trends in the markets. We just had Lorne Sugarman on talking about the metaverse. What about AI, ChatGPT, some of the companies that are benefiting, Microsoft, Bard, which is the equivalent of ChatGPT at Google or Alphabet. Maybe Google or Alphabet makes sense. NVIDIA. So these are some of the areas, but you can also look for those pockets of strength. We just had a bunch of good quality earnings from the US bank. So maybe you look at JP Morgan. We have a chart of JP Morgan here. There's a great chart. Look how JP Morgan has really moved higher in the last few months. On a separate area of the market, we look at Meta, or formerly known as Facebook. We just talked about the metaverse. Now I can tell you that Facebook or Meta has really moved higher, not so much because of the metaverse as of late, but because of things such as stories and reels and Instagram in general, or Facebook or Oculus, or all the things that going on the Meta platform and all their different areas can bring for you, whether it's WhatsApp, etc. These are all opportunities. And we know that 2 to 3 billion people are on Facebook apps or Meta apps every day. So this has been a pocket of strength and a great stock. Look at this chart, unbelievable chart. We have another chart here, Deere and Company. Deere might be familiar to all of you. This is your heavy machinery that the farmers use out in the fields, the tractors to plow the fields. You can see you can see Deere has come down a little bit, but a fantastic company. They reported fantastic earnings. Definitely a pillar of strength for this market. And I think some really good strength to come as yet. I think the last chart we have in this group, a fantastic chart, is Eli Lilly, a U.S. pharmaceutical. They actually have a drug right now that is for obesity. You take this drug and it helps you lose weight. What a magnificent drug for many people to help them with weight loss, which is obviously a huge thing in North America. And you can see this chart down in the 325 range today, over 370. They also have other drugs in their pipeline that are fantastic as well. Alzheimer's, dementia, drugs in that space as well. So fantastic opportunity to buy a stock or to get into a pocket of strength, as I call it, even in a slowing economy. So don't be fooled when you hear slowing economy, I can't make money. That is not true. You can make money in a slowing economy or an economy that's trending sideways if you look at and do your homework and find good quality names trading on the cheap. Well, I guess about a couple of segments ago, we discussed U.S. inflation, the U.S. Fed and what they're doing. Now we're going to get into Canadian inflation. And Canadian inflation numbers have dropped significantly, in my opinion. Last reading that we received just the other day, we went from 5.2% down to 4.3%. A fantastic drop in inflation. And wanted to read some interesting numbers for you. I have them here. Some interesting numbers I think some of our viewers would like to hear. Mortgage interest costs were actually up 26.5% in March, up from 23.9% in February, the largest yearly increase on record for Canadians as they grapple with the renew or initiate mortgages on higher interest rates. So from a mortgage perspective, it is definitely costing individuals a lot more to borrow money to buy a home than it did a year ago, which we obviously know. However, we're seeing gas prices down 13.8% in March. We're seeing food prices actually drop to 9.7%, down from 10.6% in February. So we're now seeing food costs drop. I don't know if you're seeing that in your grocery bills, but we're definitely starting to see that. Gasoline prices have been down from their peaks for quite some time now. All these things have helped our inflation rate fall. And interesting, we have a chart here, 12-month change in consumer price index or inflation in Canada. And so what you'll see is we're down to 4.3%, and core inflation is a little bit higher, 4.5%. So when you strip out energy and oil, you're slightly higher. I think probably the most powerful chart is our next chart, which shows that when you look at inflation now at 4.3, it is actually lower than the bank rate itself. The overnight rate from the Bank of Canada is 4.5%. And I've heard many times over the last year and a half that the Fed and Bank of Canada won't stop raising rates until the bank rate is above or equal to the inflation rate. Well, guess what? We have that here in Canada. And we've been able to bring our inflation levels down. Bank of Canada has done this, and they haven't even raised rates in the last few meetings. Whereas in the US, they seem to think they need to continue to raise rates. And if they raise it one more time, a quarter point, their bank rate will be equal to or above their inflation rate at 5.2. If they raise a quarter point in May, their rate will be 5 to 5.25. Again, it's a range where their inflation rate is 5 or 5.2%. So we're now getting into the area where the bank rates are equal to the inflation rate, which tells me we're pretty much at the end of the interest rate hiking cycle, definitely in our country, in my opinion, but also in the United States as well. Investing internationally, something I've been doing with my clients for a long time. And really, there are two ways you can invest internationally, so outside of Canada. You can buy businesses that trade here in North America, but do business or a lot of business over in parts of the world outside of North America. Names like Starbucks, Caterpillar, come to mind, Apple, Tesla. These are all names you could buy on North American exchanges that do business in other parts of the world. So global markets matter to them. Or you can actually go out and buy businesses in other parts of the world. Take, for example, Warren Buffett. Saw an interview with him, I guess, a few days ago, and he was talking about how Berkshire took a big position in some Japanese investment firms. Now, unfortunately, we're not all Warren Buffetts. We can't just go and take our billions of dollars and go out and buy businesses in many different places around the world. It doesn't work that way for most of us, and it's not that simple. So we rely on usually our investment advisors, people like myself, to go and find individual investments that trade outside of Canada, either in the US, Europe, Asia, maybe even Africa. And we can do that by perhaps owning really good businesses domiciled in the United States or even here in Canada. But I wanted everybody to understand that if you are only investing in Canadian companies, you are missing out on a lot of opportunity. Canada only represents 2 to 3% of the world's wealth. And there are many places in the world doing extremely well, even better than what we're doing here in North America. We know that the S&P first quarter of this year was up 7%. Canada was up 3.5%. Well, I'm going to show you 3 charts of 3 separate countries that are even higher than that and are at pretty much high points. First one we have here is the German DAX. The DAX, you'll see here, look how the chart has been. From about October to current, it has been on a fantastic run, down slightly when we took this picture of this chart, but overall the trend from October is bottom left to top right. If we look at another chart here, FTSE 100, which is England, London, you can see the same thing, bottom left in and around October to top right. And lastly, the CAC 40, as they say in France. This is the French index. And once again, you can see how these European indices have outperformed. So if you're buying companies on these indices, obviously there are no guarantees that those companies are going higher. But in general, I just wanted to show everybody how international investing should be a part of your portfolio. And personally, for every one investment I've been making in Canada over the last 5 to 10 years, I probably have been making 3 or 4 outside of Canada. So that's how much my investors, and that's how much I think individual investors should be considering international ideas and investments for your portfolio. Thought we'd end the show off by talking about the Canadian dollar right before we get to a couple of questions. Hopefully we can squeeze them in. Canadian dollar actually has rallied a little bit in the last little while, in that 74, 75 cent range today. And a lot of people ask me, Allan, why the strength in the Canadian dollar? Is it something we're doing here? Is it our economy? And the simple answer is no. It's actually a weakening US dollar has helped our Canadian dollar move higher. Why is the US dollar moving lower? Because I think everybody's anticipating the end of these interest rate hikes. Also, the US economy is not doing as well, slowing down. Obviously, our economy here in Canada is following as well, but a lot of focus has been on a slowing US economy and a possible mild recession. So that's going to obviously affect the currency, and the US dollar has fallen. But overall, what affects the Canadian currency? What affects our dollar versus US? Well, simply put, there are a couple of things. Obviously, GDP growth. A lot of people think that if Canada reports a good GDP growth number, it's going to affect our stock market. Not exactly. It'll affect our dollar. Oil prices, high commodity prices. That helps our dollar move higher as well. And lastly, higher interest rates. Bank of Canada were to continue on this path of higher rates, you would probably see our dollar gain strength against the US dollar. Right now, the US is raising rates and we're on pause, so our dollar is in that 70 to 75 cent range. If it had been the other way, us raising while they're on pause, they're meaning United States, you'd probably see our dollar over 80 cents. So most of the economic data that we see, retail sales, manufacturing, whatever comes out in Canada, tends to affect our dollar a lot more than it affects the stock market. And I think that fools a lot of people. But right now, our dollar has been gaining a little bit of strength versus the US. I anticipate our dollar hovering around 75 to 77 cents at some point. I think that is a good average for our dollar. And anytime you factor in converting currency, that should be kind of the base case, in my opinion. A 75, 76 cent dollar seems to always make sense. And that's what our dollar tends to reverts to the mean or the average, in my opinion, over the long term. So I know we have a long show today, so not much time for viewer questions. I know our interview off the top was a great interview and went a little longer, which is great. But I have I guess a couple of minutes here, so wanted to take maybe a one or two questions. First question here: is there a time of the year that is best to book an annual review of your portfolio with a financial advisor? Quick answer is no. There is no time of the year that is best to book an annual review. Some people like to do it at the start of the year. I guess what makes sense. Maybe when they do their RSPs, a contribution for the year, they meet with their advisor. Some people like to do it maybe at the end of the year to go over things that from the year that was. I meet clients throughout the year. We tend to grab lunch, maybe in the summer when it's easier to get around and meet everybody. I have clients all over Southern Ontario, all over Canada, actually. But I tend to go out on the road and meet people for lunch, etc. So I guess the simple answer is no. There is no right or wrong time to meet your investment advisor. I would say meet with your investment advisor as often as you feel comfortable doing it. I guess a second and last question. I know that the Bank of Canada has paused on interest rate hikes for now, but my gut says that they will continue to raise interest rates. What are your thoughts on this? I think they will not raise interest rates, at least not anytime soon. I think inflation is coming down based on what they've already done. I still believe that some of the hikes that they've made in the past have to make their way through the economy. As yet, they haven't done so. So I think the Bank of Canada is on hold. And as long as we see inflation trending towards 2-3%, I think the Bank of Canada will remain on hold for at least the foreseeable future. And maybe, just maybe, the next interest rate movement may be a decrease. With that, I want to thank everyone for joining our show today. A little longer than usual, but that's okay. A lot of information to parse through. Again, I want to thank you for taking the time out of your busy day to spend it with us. And I look forward to seeing everybody 2 weeks from today on May 3rd. We'll have a fantastic show then, talking about what I believe is important for all investors to watch and follow. And until then, happy investing.